Welcome back to the deep dive. In finance, there's just this constant flood of information, right?
Absolutely. It's easy to get lost.
Yeah, exactly. So today we're aiming to cut through that noise. We're going deep on the future of the investment firms market.
Really crucial sector.
It is. And when we say investment firms, we mean the whole lot. Asset managers, wealth advisors, brokers, private equity. Basically, anyone helping people and institutions manage their money.
The whole ecosystem, yeah.
Our main source for this deep dive is a really thorough report from Cognitive Market Research. It's got projections for the market starting 2025, looking all the way out to 2033.
A good long-term view.
Right. And our mission really is to pull out the key insights for you, the listener. We want to understand the forces behind the numbers, not just list stats.
Context is everything.
Okay, so let's grab people's attention right away. Let's talk big picture, global numbers. Get this. Back in 2021, the global market was already huge. We're talking almost $3 trillion. That's 2,998.47 billion, to be precise.
Already massive scale.
But look ahead. The projection for 2033, it's expected to hit $4.56 trillion. That's 4,556.76 billion.
Wow.
Yeah. And that works out to a compound annual growth rate, the CAGR, of about 3.5%, almost 3.5%, steady growth over a decade. So what does that tell us right off the bat?
Well, seeing numbers like that, especially the consistency over a decade, it's really significant and tells us this isn't just some short-term blip. We're looking at a fundamental confidence, you could say, in global financial system.
Resilience.
Resilience, exactly. And a really persistent appetite for, well, for wealth creation and management globally. For you listening, this isn't just a number game.
Right.
It signals how absolutely central these investment services are becoming, both for the wider economy and, for individual financial health. It points to deeper shifts happening.
That's a really strong starting point. So, okay, a positive global picture. But where's the action concentrated? Where are the real hot spots? Let's zoom into North America first. It seems like a mature market, maybe, but it's still showing some surprising energy. In 2021, it pulled in over $1.28 trillion.
Still the giant.
Oh, yeah. And it's projected to reach nearly $1.86 trillion by 2033. That's a solid CAGR, 3.16%. The U.S. is obviously dominant.
Naturally.
But Canada is growing at nearly 4% annually, which is interesting. And Mexico is also trending strongly upwards. Why such consistent growth there? Some might expect it to slow down.
That's a great question because it sort of pushes back against that idea that mature markets just plateau.
Right.
What we're seeing in North America, I think, is growth deeply tied to constant tech innovation.
Technology.
Yes, and also increasingly sophisticated investors. People are moving beyond just basic stocks and bonds. There's this huge demand for more complex, more personalized financial advice and products. Think about wealth tech platforms, AI advisors, specialized private equity, alternative assets.
All that new stuff.
Exactly. That constant evolution plus ongoing wealth accumulation just keeps fueling demand, even in a developed region.
Okay, that makes sense. So from North America, let's cross the Atlantic to Europe.
Okay.
Different picture here, maybe. Revenue was around $645 billion in 2021. It's expected to grow to over $920 billion by 2033. The CAGR is roughly 3.1%.
Still growing steadily.
Steady, yeah. The UK and Germany look like the powerhouses. They're growing quite well, over 3.4% and 3.8% respectively. But France seems a bit more modest, and Russia's growth looks slower. Why the differences across Europe?
Yeah, Europe really shows how fragmented financial markets can still be, even with the EU.
Right.
The overall trend is positive, definitely, but those different growth rates, they reflect a real mix of things, national economic policies, different regulations, sometimes very different investor attitudes and behaviors from country to country.
So it's not one single story.
Not at all.
Yeah.
Germany's strong economy helps fuel investment there. Other places might be recovering more slowly or have, let's say, less agile financial systems. You really have to look at the local details in Europe.
Got it. Okay, so North America and Europe showing that steady, solid growth.
Yeah.
But if you want dynamism, real explosive growth, it seems like Asia-Pacific is the place to look.
Well, absolutely. APAC is where things get really exciting.
The numbers are quite something. It jumps from about $728 billion in 2021 to a projected $1.23 trillion by 2033.
A huge leap.
And look at the CAGR. It's the highest of all the major regions, nearly 4.5%.
Almost 1.5 times the global average.
Yeah. And within APAC, China's surging, obviously, but India India's growth rate is incredible, projected at 5.4% CAGR.
That's phenomenal.
Singapore is doing well too. Southeast Asia generally performing strongly. What is lighting the fire under APAC like this?
Well, it's like you said, it's explosive. And it's not just one thing. It's kind of a perfect storm, really.
Yep.
You've got rapid economic development across the board,
Yeah.
a huge and growing middle class with rising incomes.
More potential investors.
Exactly. And crucially, a massive increase in financial inclusion, often driven by technology. Think about digital investment apps.
Mobile first.
Right. They're leapfrogging the old banking systems in many places, giving access to millions who just couldn't invest before. India's 5.4%. That's digital access, meeting huge aspiration. It's unlocking massive potential very quickly.
Incredible. Okay, after that surge in Asia, let's shift focus. South America may be a region that sometimes overlooks, but it seems to be building real momentum.
Yeah, definitely worth watching.
Also on a strong upward path, growing from roughly $153 billion in 2021 to $242 billion by 2033. That's a CAGR of nearly 3.9%.
Very solid growth.
Brazil's leading, Idoji, but Argentina's ADR is impressive, over 4.4%.
Yeah, that's interesting, that kind of consistent growth in South America, especially in places like Argentina that have seen, volatility in the past. It suggests their financial markets are maturing, maybe increased stability, growing trust in institutions that encourages more people to actually participate in investing. It feels like a sign of sort of broader economic strengthening.
Okay, and the Middle East.
Yeah.
Also showing pretty robust growth.
Yes, another strong performer.
Climbing from about $126 billion in 2021 to nearly $197 billion by 2033. The core GR there is 3.77%. The UAE really stands out, though, with a very strong 4.3% CAGR.
If you step back and look at the Middle East, particularly the Gulf states, a lot of this growth ties into efforts to diversify their economies away from just oil and gas.
Right, the diversification push.
Exactly. The UAE's strong performance reflects huge investment in finance, tech, infrastructure. They're actively building themselves up as major financial hubs to attract capital, both local and international. It's quite strategic.
Makes sense. Okay, finally, let's touch on Africa. Steady growth here, too, though maybe not as explosive as APAC.
Steady is the key word, but still very important.
The market grows from nearly $63 billion in 2021 to just over $98 billion by 2033. The CAGR is almost 2.9%.
Okay.
Now, that overall CAGR is lower than some other regions, yeah, but specific countries like South Africa are showing stronger momentum, about 3.5% CAGR there.
And that distinction is really important. Africa's growth might look slower compared to Asia on paper, but given the starting point for many economies there, it's incredibly significant.
Right, building a base.
Precisely. It points to developing economies, a growing interest in formal financial systems, increasing access. Even that slightly lower KGR represents foundational progress for a huge young population. And the potential, especially as digital tech continues to spread across the continent, it's just immense.
So we've gone around the globe. Let's try and synthesize this. What's the big takeaway from this deep dive?
Well, I think the overarching message is pretty clear, isn't it?
It seems to be consistent upward movement.
Yeah.
Robust growth almost everywhere.
Exactly. The investment firms market is clearly on an upward trajectory globally. It's not just pockets of growth, it's widespread, resilient expansion.
And the report points to specific reasons why, right? The core drivers.
Yes, absolutely. And we've touched on them as we went region by region. First, there's the general global economic recovery playing a role. Then there's that huge increase in financial inclusion. We talked about more people getting access to banking and investment.
Big factor in APAC and Africa especially.
Definitely. Then ongoing technological innovation, robo-advisors, blockchain applications, better platforms. It's changing everything about how services are delivered.
Making it easier, more accessible.
Right. And finally, just heightened investor activity overall. Individuals, institutions, people are actively looking for ways to grow and diversify their wealth. These forces together are really reshaping things.
That really does paint a picture of solid, resilient growth based on some pretty fundamental shifts. But let me ask you this. Is there a risk the report might be maybe a bit too optimistic? Are there potential headwinds it perhaps underplays, things that could slow this down?
That's a really important question to ask. While the report rightly focuses on these strong positive drivers, you always have to consider the other side. Well, geopolitical instability is always a factor. Major conflicts, trade wars, those can definitely impact confidence in markets. Then there are potential regulatory changes. New rules could increase costs or change how firms operate.
True.
And of course, the possibility of another unforeseen global economic shock or a sharper downturn than expected. These things could certainly affect the pace of growth, even if that underlying long-term demand for investment services remains strong. It's about balancing the opportunity with potential risks.
A crucial point. Need that nuance. Okay, so for you, our listener, here's something to maybe chew on after we finish.
A final thought.
Yeah, a final provocative thought. Given these pretty consistent global growth trends we've discussed, and the drivers behind them, tech, inclusion, recovery, how might these big shifts personally impact your financial planning over the next decade? Or even your career path, maybe?
Interesting angle.
How will this growing global appetite for investment services maybe reshape the economy that you interact with every single day? Something to think about as you navigate your own journey. Welcome to The Deep Dive. We're the podcast that cuts through the noise to get you smart, fast. Today we're diving headfirst into the fascinating, ever-shifting world of investment firms. Our mission is really to unpack how wealth is managed, how it's grown globally. We want to bring you those, surprising insights that genuinely make you think differently. We're asking, is the traditional investment firm sort of on the brink of extinction, or is it just evolving into something new?
That's right. Yeah, in this deep dive, we're going to pull back the curtain a bit. Look at the key drivers, the significant hurdles, and the really transformative innovations that are redefining the financial landscape. For individuals, for institutions, for everyone, really. It's about understanding how your money, and frankly, the global economy, is actually being shaped right now.
Okay, so let's unpack this.
Yeah.
What's truly fueling the expansion of investment firms today? Because, it feels like the money just keeps flowing in.
It absolutely does. And the first major driver, well, it isn't just more wealth, but a kind of seismic shift in how that wealth is being managed, especially with the rising global middle class. You see unprecedented capital formation in developing economies. This creates millions of first-time investors, people who need guidance that goes beyond just basic banking. And this isn't just about, adding more mutual fund accounts. It's about a massive global demand for quite sophisticated financial advisory, asset management services,
Right.
leading to trillions flowing into everything, retirement solutions, venture capital funds, you name it, across regions that were, frankly, pretty underserved before.
Right. And here's where it gets really interesting for me, because it's not just the new money, right? It's how pure technology is reshaping access, the whole digital transformation thing.
Precisely. Yeah, robo-advisors handle the basics, sure. But the real disruption, it's how AI and these digital platforms are enabling what you might call predictive wealth management. Firms can now leverage just vast data sets to anticipate major life events.
Like what kind of events?
Oh, things like a new baby, buying a house, maybe even a career change. They can see the patterns long before the client actually tells them. This allows for hyper-personalized advice. It goes way beyond just a standard risk profile. It offers solutions that are genuinely proactive. It boosts operational efficiency, sure, definitely. But it's fundamentally transforming the client experience. And it allows those traditional firms to reach a younger, more tech-savvy generation with really bespoke offerings.
Okay, so we've got individual wealth growing, digital access exploding. What's the third big piece driving growth? I'm thinking about that hunt for diversification.
You're spot on, yeah. The growing focus on diversification, especially into alternative investments, that's fundamentally reshaping demand. With ongoing market volatility, persistently low interest rates, investors are increasingly looking beyond just traditional stocks and bonds.
So what are they looking at instead?
Think private equity, right? Investing directly in private companies, hedge funds using complex strategies, real estate investment trusts, REITs, and perhaps most notably, ESG portfolios. That's environmental, social, and governance factors.
ESG seems to be everywhere now.
It really is. And it's not just about ethical investing anymore. Strong ESG scores are increasingly seen as indicators of, long-term financial resilience, maybe reduced regulatory risk. So ESG is becoming kind of a smart money play, Firms offering these tailored, diversified, and ESG integrated strategies, they're seeing much greater demand. And that drives significant product innovation.
Okay, it sounds like a bit of a growth paradise when firms offer all these diverse options. But I imagine it's not all smooth sailing. What are the major obstacles they're wrestling with?
It's definitely not smooth sailing, no. One major restraint is simply the pervasive market volatility and economic uncertainty. When you have factors like geopolitical tensions, inflation spikes, or aggressive interest rate hikes like we've seen, it can profoundly rattle investor confidence.
Yeah, you see people getting nervous.
Exactly. People don't just pause investments, they actively pull capital. They shift to cash or what they see as safe havens. And this directly limits capital inflow for firms, right? It impacts their revenues, and it often forces them to recalibrate entire investment strategies, sometimes in real time. That's a huge operational challenge.
And then there's the incredibly complex regulatory maze. I mean, I can only imagine the headaches involved there.
Oh, indeed. The strict regulatory environment is a monumental hurdle. It really is. Investment firms have to navigate this really intricate web of rules. Transparency, tax disclosures, anti-money laundering AML procedures, and maybe most critically, fiduciary responsibilities.
Explain that a bit more. Fiduciary.
Sure. It isn't just a guideline, it's a legal and ethical bedrock. It means an investment firm must put your financial interests ahead of their own. Full stop. They have to ensure transparency on fees, risks, any conflicts of interest. The challenge isn't just keeping up with changing rules, it's the sheer scale of monitoring global transactions. Firms are now leveraging advanced machine learning, AI, to detect subtle patterns of suspicious activity in real time, basically fighting financial crime at a scale impossible for humans alone. But yeah, it's a constant arms race.
And then there's the elephant in the room, right?
Here.
The escalating competition.
That's a huge one, yeah. The growing competition from fintech startups, these DIY platforms, it poses a serious, almost existential challenge to traditional firms. You look at platforms like Robinhood, Wealthfront, they've fundamentally reshaped the industry. Commission-free trading, incredibly accessible financial tools.
It makes it easy for people to just do it themselves.
It does, and this isn't just about losing a few millennial clients here and there. It puts immense pressure on traditional firms to justify their fees, their whole value proposition. Many are responding by acquiring these disruptors or partnering with them or trying to rapidly develop their own competitive tech stacks. But that requires significant investment and often a big cultural shift inside the firm. It's no longer enough to just offer good returns. You need that frictionless, digital-first experience too.
Okay, let's shift gears a bit now and look towards the future. What are the really exciting trends that are defining what this industry might look like tomorrow?
Well, one standout trend, and we touched on it briefly, is undeniably the deepening integration of ESG investing. It's really moved beyond just being a niche offering. Now, firms are grappling with how to genuinely measure and report on environmental, social, and governance impact.
Because there's that whole greenwashing concern, right?
Right. Exactly. The debate around greenwashing is very real, and it's pushing firms to develop more robust metrics, more transparent methodologies. For you, as an informed investor, it's about demanding proof of positive impact, not just accepting a label. Firms that can truly align their offerings with ethical and sustainable growth, they're earning greater trust, greater loyalty, and they're attracting a new wave of capital that prioritizes purpose alongside profit.
So it sounds like it's not an either situation, but a truly integrated approach. What does that mean for how, the human touch meets this cutting-edge tech?
Exactly. We're seeing this rapid expansion of hybrid advisory models, and this is genuinely exciting stuff. It's about leveraging the best of both worlds. So imagine you're a seasoned human advisor, right? They're focusing on your life goals, your emotional decisions, maybe complex estate planning, the really deeply personal aspects.
Okay.
Meanwhile, AI handles the, let's be honest, monotonous data-intensive tasks, daily portfolio rebalancing, tax loss harvesting, identifying optimal investment opportunities from these huge data sets, flagging anomalies.
So the AI does the grunt work.
It's kind of, yeah. It allows firms to offer scalable yet highly personalized services to everyone, really, from ultra-high net worth individuals right down to first-time investors. It creates this personalized experience that's both high-touch and hyper-efficient. It's a win-win.
So what does all this mean for data-driven decisions then? This isn't just about speed, is it? It sounds like entirely new levels of insight.
Absolutely. That's the third transformative trend. The sheer power of big data and predictive analytics. And look, this isn't just about using more data. It's about using different kinds of data and applying advanced algorithms to find insights no human possibly could on their own.
Like what sort of different data?
Well, firms are now doing sophisticated sentiment analysis, for example, on millions of news articles, social media posts, detecting shifts in market moods sometimes before prices actually move. They're using alternative data, like satellite imagery of retail parking lots maybe, to predict sales figures before company reports are even released.
Wow.
Yeah. It helps firms better anticipate market movements, manage risk much more effectively, and deliver sharper real-time investment strategies. It's really about equipping firms with a crucial edge, which hopefully leads to smarter decisions and ultimately stronger portfolios for investors like you.
So we've just navigated a really comprehensive deep dive into the investment firms market. It's clear it's rich with innovation, enormous opportunities, but also some very real challenges. It's quite a dynamic ecosystem.
Yeah, it really is. So what does this all mean for you as you think about navigating your own financial future? Or maybe just understanding the broader economic landscape. The immense value of understanding these shifts, well, it really can't be overstated. From where you decide to invest your money to what kind of advice you might seek out. This industry is evolving at lightning speed.
And as we see this blend of human insight and AI getting stronger and stronger, how might the very definition of a personalized investment strategy continue to evolve? Beyond just the financial returns, how might firms measure true value for their clients in a world that's increasingly focused on ethical and sustainable impact? That's something truly worth thinking about.